You'll see our GDP per capita this year is $1,558 per person, and the target is 1,837. And you know from Vision 2030 that we are looking to be $4,000 per capita by 2030. International trade, we're still doing badly. The gap between our imports and exports actually expanded. And again, this is one of the key focuses of the Big Four agenda, increasing manufacturing and therefore being able to export more and import less. That gap, the increase in that gap is not a good one. It went from 34% to 40% in 2017. And if it keeps going that way, exports are flat and imports are increasing because purchasing power is increasing. We will get to a point where it is not sustainable. If we can work with those countries with whom we do business to make it criminal in their country to bribe an official of this country or any other country, we would go a long, long way towards fighting and combating corruption. There are countries which have zero tolerance of corruption within their boundaries, but they have 100% tolerance for corruption outside their country. If we can change this, and it doesn't have to be all the countries, just the ones that we do business with, I think we would go a long way to fighting what would be cross-border corruption. If the county governments could increase their rate collection to at least 50–60%, and the government continues to improve or increase the allocation of revenue, I believe we will get closer to getting the service delivery that we need from the counties and reduce the amount of burden that the counties is having on business.
We feel that the very many reforms that have happened. You remember in the year 2013 we had a new VAT Act of 2013. In 2015 we had a new tax Procedures Act, which was implemented at the beginning of 2016. We have also the Excise Act of 2015, which came in place, and finally the new VAT income tax law. Talking about the proposed corporate rate increase to that 5% for companies that make over 500 million Kenya shillings, and for individuals who are above 750,000 shillings a month. Our view is that this largely would be seen to be sort of panic by government to want to increase the tax rate, obviously to meet the debt burden, the repayment of the SGR loans, the Eurobonds and the others. Our feeling is that that is not sustainable. You do not grow the taxes by increasing the tax rate, but what you need to be doing is actually to expand the tax base, especially to the informal sector. On one side you seem to be wanting to increase the taxes for the companies that are doing well, for individuals that are doing well, but on the other side you are sidestepping the need to create innovations of taxing the informal sector, which is controlling 34% of the economy. So our feeling is that that is misinformed, and as a matter of fact, globally, wherever you go today, the corporate tax rates, the income tax rates are going downwards. Now, what the new act proposes, or the bill proposes to do, is to actually cut that down to sometimes even below 100%, capped at 100% for some industries, and others below 100%. So this is going to not even address the Big Four agenda, because the intention of that bill, it's been hailed as actually timely to help the Big Four.